Hi everyone, and I'm K.Bakiyaraj, working as Assistant Professor, the Department of MBA at Dr. Asst.Prof College of Arts and Science. And today we are going to discuss about a very important topic about in company law, about the shares and debentures. So here we are going to go into introduction about introduction to the shares. So a share is a share capital of the money, including the stock. It is a definition of the term as a share. In other words, a said to be a share. A share is the measure of the interest in the company's asset held by the shareholders. And we are going to discuss about the meaning of the share. A share is a stake of a person, that is the shareholders in a company. It represents the interest of the member of a company. If it is interest of the shareholders in a company, I help to calculate the dividend, the value that is to be delivered to each to the shareholders. And here we are going to discuss about what are the different kinds of share capital. So share may be divided into two different classifications. Number one is about the equity share, number two about the preference shares. So here we are going to discuss about what do you mean by the term as the preference share capital. The preference shares are also known as preferred stock or shares of the company stock that pay the dividend to the shareholders again ahead of the dividend of the regular stocks. The preference shareholders may get the dividend as set up the amount. Preference share is given by the priority over the equity owners within the company with which it comes to be receiving the dividends. Preference shares are the entitled to receive the payment from the corporate assets before company's stockholders, and the company preference shares by the fixed dividend, whereas the common equity has to be often. Preference share is a part of the issued share capital by the company carrying a preferential shares, that is about dividend payment and about the repayments. So what do you mean by the term the dividend payment? A dividend payment is a fixed amount or the amount calculated at the fixed rate that might or might not be subject to the income tax. So what do you mean by the term as a repayment? In case of winding up a repayment of the amount of paid up share capital, there is a preferential right to payment of any fixed premium or any fixed scale. The memorandum or article of the company specify for the same. And what are the different type of preference shares? First one is about there are the two different type of preference shares. One is the convertible, next one is the non-convertible. What do you mean by the term convertible preference shares? The shares or the convertible preferred stock are those that are easily convertible into equity shares or the debentures. The shares cannot be converted into equity shares after the period already determined as per the article of the association of the company. The procedure for the conversion is given under the article of the association of the company. The word is in convertible preference shares. Second different type of preference share is non-convertible preference shares. What do you mean by non-convertible preference share? Preference share is a non-convertible conversion. Features cannot be converted into equity share. That word is denoted as a non-convertible preference shares. The shares cannot be converted into equity shares, that is fixed rate of the dividend, and the holders have the prior rights over the asset of the time of the liquidation. Third type of the preference share is redeemable preference shares. The shares that are issuing the business can buy back or redeem at the set of the price at the time is known as redeemable preference shares, that is during the lifetime periods. These shares benefits the business by acting as a cushion against the inflations. The word is division redeemable preference shares. Fourth one is what do you mean by the term non-redeemable preference shares? Non-redeemable preference share or one that are the issuing the corporations cannot be redeemed or repurchased at the certain dates. The non-redeemable preference shares or non-redeemable preference shares or lifesaver for the businesses during the inflationary periods. These are also known as the perpetual preference shares. They do not carry the maturity dates within them. They are paid at the time of the winding up of the companies. Fifth one is what do you mean by the term adjustable preference shares? The dividend rate of the adjustable preference share is variable and affected by the current market rates. The dividend or such shares are dependable upon the financial factors of the company, like the profit, earnings per share, etc. The dividend rates fluctuate as per the financial performance of the company. This provides the shareholders with the chance to get the higher returns in prosperous times. So next, this is the last part. We're going to discuss what are the important features of the preference shares, and there is some few important characteristics about to invest in preference shares. First one is these shares are transformed into common stock, and the convertible preference shares into ordinary stock. Features number 2 was about dividend payments. Dividend payment is shareholders can receive the dividend payments which other shareholders would not be may receive dividend later. Third feature about the dividend policies, and fourth feature about the voting rights, and fifth one is about the asset preferences. So this is the part we are going to discuss about the different type of preference shares. And next part will go to the part important term about share capital in the next class. Thank you so much.